And he's from Black Bull Markets. Behind me is the chart of Tesla, which is down almost 12% year to date. And we're going to look at some reasons why you should maybe consider looking at a short on Tesla. Of course, over the last 12 to 18 months, Tesla's been the darling of the NASDAQ, really carrying forth the whole tech story in the US. And of course, that came by the Elon Musk personality trade and the cult following he's developed, especially now that's moved into the crypto world. But what's happened with Tesla? Well, a lot has fundamentally changed since the beginning of the year. However, investors are still looking at key price targets to scoop up more shares, and those potentially come at these key support areas at the $560 a share mark, and then this key psychological level at the $500 mark. And we're down about 11.7% year to date. To put it in perspective, if the market does move to 560, you're looking at a 13% decline year to date, and then 500, 22.4 respectively. So pretty interesting prospect in the short term for Tesla's price targets to the downside. However, why are we looking to the downside? Well, firstly, in this technical formation, we're in this flattening wedge pattern, and we're currently top of that trend line where we've just tested that trend line above 650, now trading just shy of $650. Of course, the equity markets have started to turn to the downside today. Tesla is held somewhat resilient. However, if the market, as the global index continues to sell off, people could look at an excuse to short some of their profitable trades that have developed over the last 12 or 18 months. So let's look at some reasons. Well, firstly, following that flattening wedge, of course, Elon Musk has come out and says he's potentially not enjoying the role as much as he did before. And of course, that negative PR coming out about the Solar City purchase that his board are pretty unhappy about. It's cost him about $2.5 billion since 2016. So question marks around that, and that's really drawing concerns for investors. Of course, it's a small pocket change for the Tesla group, but still something to be wary about. Of course, recently as well, 300,000 cars recalled from China, a genuine concern about safety over there. So it's an interesting recall that's happened for the EV provider, one of the first that we've seen globally, and it could occur elsewhere. And lastly, of course, Michael Burry, the big short phenomena, has recently revealed a $500 million short position on Tesla, which is pretty interesting. If you're a cult follower of him, you would have seen that he's made some significant money shorting some key stocks. So that could potentially all signal some downside on Tesla. A lot of investors now potentially seeing this as somewhat overvalued following that extensive bull run up to $800 a share that we saw earlier on this year. A lot of that euphoria has somewhat cooled off, so investors could now be looking at some targets potentially to either buy back at 560 or 500 or look at selling below them. So what are your options? Well, your options are potentially to wait at 560 and see how the market reacts. If we do get a reaction to the upside, that could signal some support. But what you're wanting to do is wait potentially for a break back of that trend line above 650, following a break below towards 560, and then break of that trend line. That's what's going to signify your buy the dip trade. However, on the flip side, if you're looking at 560 as a buying opportunity, if you do buy in and do get caught as the market continues to fall, you're then looking at 500 as your next price target, which again would be a almost 23% year-to-date loss on Tesla already. But you're looking at that as your next buying target. If you do get a reaction, could see a retest of 560. If it fails to break 560, falls back below 500, you're then in bear territory, and that's the trade that you should be looking at. So do keep an eye on this one and trade safe.